Good afternoon, everyone, and thank you for being here this afternoon. Apologize for the few minutes delay on the start time. We have just recently become aware of an issue that may affect the event slightly. The feature for providing questions, which is an integral part of this event, is not active. We are working to correct it. However, in the meantime, we want to provide an email address that you can submit questions to. That email address will be smallbusiness@gov.texas.gov. So throughout this event, if you come up with some questions, please send those questions to smallbusiness@gov.texas.gov. Okay, well, we're going to kick right on into this so we can address as much information as possible. To get us started, I would definitely love to introduce Larry McManus, who is the Director of Business and Community Development here within the Office of the Governor, the Texas Economic Development and Tourism Office. Larry, we'd love to hear some opening remarks from you, sir.
Thank you, Jarvis, for the introduction. Hello and welcome. My name is Larry McManus. I'm the Director of Business and Community Development for the Economic Development and Tourism Office here in the Governor's office. On behalf of Governor Abbott and our Executive Director, Adriana Cruz, it is my honor to welcome you to the Governor's Small Business Series webinar, Just the Facts, what you need to know about the Texas Small Business Credit Initiative. This webinar will provide small business owners and financial institutions the latest information about the Texas Small Business Credit Initiative and its expected rollout. Today, we'll hear from members of the Governor's Economic Development and Finance team on this subject. We are delighted to have you participate as we expand on the connection of small business owners and aspiring entrepreneurs with the resources and information needed to start, strengthen, and grow a business. Our state's 3.1 million small businesses are the backbone of our economy, and during the pandemic, we saw firsthand the resiliency of our state's small businesses and their ability to pivot. Texas is one of the leading states for small business job growth, and our state's small businesses are helping Texas lead the nation in an economic resurgence. In fact, thanks to the small businesses, Texas has added back all jobs lost to the pandemic and more, surpassing pre-pandemic employment levels. So Governor Abbott is committed to making Texas a place for business to succeed, and our small business assistance team is ready to assist small businesses, as is our economic development finance team. We are excited to bring you this information to you, and I will turn it back to you, Jarvis, to get us started. Thank you.
Thank you, Mr. McManus. And I'm aware that many of our audience members have been here since we started doing these webinars back at the start of 2020. Those webinars were originally focused on pandemic assistance, and not much has changed. We are still here in the ARPA funds, as a lot of interest has been around the State Small Business Credit Initiative, as well as the Texas Travel Industry Recovery Grant. We have Texified the State Small Business Credit Initiative to be a Texas Small Business Credit Initiative. And I'm pleased to have today another member of the Office of the Governor, Mr. Dan Poane, who will be talking about the program and just the facts. Additionally, in addition to Dan, we have Nancy Namas, who is another administrator of this program within our office. So I'd like to introduce them both. Dan, tell us a little bit about yourself.
Hello, and thank you everyone for attending this webinar. My name's Dan Poane. I'm the program manager for TSBCI, and Nancy Namas is the finance specialist on the TSBCI programs as well. We've been working closely with all departments within the Office of the Governor Economic Development and also with Treasury and our federal counterparts to get this program stood up. And we are close to our signing of the allocation agreement with Treasury. And so we are rapidly approaching the deadline for this program to go live. We're very excited about the interest we've received and looking forward to starting up and interacting with all of y'all in the program.
Thank you, Dan, and thank you also, Nancy, for being here. I'd love for you to say hello for us this morning, Nancy. I'm pretty sure you said hello. We may have not heard you, but good morning or afternoon to you, ma'am. So we're going to get right on into the content. And before we do, I also want to reiterate the email address. We are having technical difficulties with our Q&A feed. Normally, we would have an option for each of you right here in the platform of Microsoft Teams to submit your questions for us to respond and ask those to our panelists. Because that function is not working properly at this time, you can send any and all questions to smallbusiness@gov.texas.gov. Again, that's small business, one word, at gov.texas.gov, and we'll get to those appropriately. So Dan Poane is going to tell us a lot about this program, and between myself and our behind the scenes crew, we'll come up with some questions that we think are some frequently asked questions that Dan and Nancy have or receive regularly. But again, as I said, feel free to email as many as you can to that email inbox as we want to address the questions that are on your mind. So Dan, I'm going to give it over to you to tell us all the facts about this program, sir.
Thank you, Jarvis. So as mentioned, SSBCI 2.0 has gone live. It's part of a reissuance of SSBCI and refunding of SSBCI 1.0, which was created under the Small Business Jobs Act in 2010. And this authorization is under the ARPA, the American Rescue Plan Act. In this reauthorization, the federal government has increased the funding to $10 billion for all states collectively, of which Texas is allocated up to $472 million. Of the approved programs, Texas is going to be operating a capital access program and a loan guarantee program. The capital access program is an incentive program to help lenders feel more comfortable and reduce risk in lending to small businesses and SETI businesses. That's the focus of the program. We want small businesses, and SETI stands for socially and economically disadvantaged individuals, those with reduced access to capital, to not have a reduced access to capital. So this is to incentivize lenders to lend to those businesses and those business owners and owners in SETI areas as well. For the capital access program, the way that functions is that a loan loss reserve account is created for each financial institution that is participating in the CAP program. When the financial institution enrolls a loan, they will contribute up to 3.5% of the loan amount, and the borrower will match that. So that's a total of 7%, and that's a maximum. It can be less, and that's on the lender's discretion, though we do target the higher amounts for SETI specific businesses, SETI qualifying businesses, and very small businesses with fewer than 10 employees. So those amounts are contributed as premium payments to the loan loss reserve account for that lender. The state then matches those contributions in total. So it can be up to 14% of an enrolled loan contributed to the loan loss reserve account. That account builds, and when as the financial institution enrolls eligible loans, and if the financial institution has a default, it can submit a claim against those funds for losses incurred from enrolled loans. For our allocations of the 472 million, we are allocating 113.8 million to the CAP program. We're estimating that the loan loss reserve contributions that the state will contribute to all loan loss reserve accounts in the first year is 8.5 million, and we estimate that 2,300 loans will be enrolled in the program in the first year. I see some questions coming up as far as interest rates on the loan programs, and that is the terms of the loans are wholly determined between the lender and the borrower, and then the loans are submitted to the program for enrollment. There is a published use of funds. I don't have it on a slide here. There's a volume of information that we weren't able to fit in this webinar and the presentation. So that will be provided, will be in the rules and also in the participation agreement to be signed between the financial institutions and the state. I see a question on borrower credit. That is again between the financial institution and the borrower. The state does not interfere or dictate loan terms. Let's see. Other questions? Okay. Who does the borrower need to go to in order to get the loan? The borrower should contact their preferred lender and inquire about the lender's participation in the TSBCI program. So that will encourage lender participation, and then the lender will be able to work with the borrower on a qualified loan to enroll. Moving on to the second program, we're also going to operate a loan guarantee program. This is more straightforward. Through the program, we will be guaranteeing loans of up to 20 million. However, the strong focus is going to be on loans of up to 5 million or less. For capital access, there is a firm cap of loan amounts at $5 million. So the target for both programs is 5 million and less, but the LGP program has the ability to go up to 20 million. To do so, a financial institution would have to make a special request to go over the 5 million mark. We anticipate that the federal allocation for the loan guarantee program will be 341 million. We're looking forward to hopefully guaranteeing 25.6 million loans in the first year, or $25.6 million in guarantees in the first year, and that should be on 520 loans approximately. I see a question, can municipalities tap into this if they offer USDA revolving loans? That is a good question. I'm going to have to research that. If you can, if you've sent us an email, we will respond to that in short order, hopefully. The current setup and the current vision is that it will be insured depository institutions, insured credit unions, and CDFIs. Potentially, if the municipality can work with CDFI, there might be some joint opportunity there. I'm not certain. But there is also Treasury guidance available on that, and we'll have links at the end of the slide. And that was a perfect segue to this slide. Financial institutions, banks, credit unions, CDFIs are eligible to participate in the program. We are currently finalizing the application portal for financial institutions to log in and submit their information to apply to participate in the program. The website for the portal is listed on the slide, tsbci.gov.texas.gov. So if you go there, you'll see an email sign up. I believe many of you may have already signed up through that. If you haven't, please do so. It's where you'll get any email notifications from the program about things like go live dates. So that's and any other changes that may come up. The amount of information required for applications. Financial institutions will have to provide information evidencing financial stability, as well as information on boards and a number of Treasury required reporting information. We anticipate the portal to go live early January. I see a question from the chat. How large can a business be to access the program? We will get to that shortly. Oh, perfect timing. Loans can be enrolled if the borrower meets the following criteria. There are different size requirements for different portions. Very small businesses are included with SETI businesses for the targeting of this program. So higher guarantee amounts, higher loan loss reserve contributions can be provided for very small businesses with fewer than 10 employees and SETI businesses. But we also will enroll loans to businesses with 499 or fewer employees. So up to 499 employees. Nonprofits are also eligible. Businesses should be domiciled in Texas, and 51% or more of their employees should be located within the state. To qualify for the SETI portion, these are some of the requirements. We're looking to capture all ways in which a business or an owner of a business could be considered SETI, socially economically disadvantaged individual. So SETI ownerships in a CDFI investment area, SETI, and that would qualify the business for those higher guarantee and loan loss reserve contribution amounts. The participation agreement, after the FI provides information through the portal, the participation agreement will be compiled and provided to the FI for signature and then sent back. There's a requirement for a wet signature on that per statute. So after it's sent back, we can then approve the FI to participate in the program. Once they're approved and able to participate, they can enroll loans through the portal and submit claims through the portal as well, should there be defaults in their enrolled portfolio. There are reporting requirements as well. Treasury has a number of reporting requirements, and there's a link to them at the end of the webinar. They are out there on Treasury's SSBCI website. So many of those are Treasury mandated. The state is required to provide reports to Treasury within 30 days from the end of each quarter. So we require reports from the participating financial institutions within 15 days to give us both the same amount of time to compile and provide that information. And this information will be further spelled out within the participation agreement between the state and the FI. All right, question. Interest rates are always a concern for borrowers. Will there be any loan interest caps mandated by the state? The state does not, the terms of the loan is strictly the agreement between the FI and the borrower. The state does not dictate terms for these programs. So whatever the borrower agrees to with the FI, whatever the FI can offer the borrower, those are the terms of the loan. Our hope is that these programs will reduce the risk for lenders so that they may be able to offer a lower rate, but we do not dictate caps on those. Another question. Are existing Texas small businesses or new Texas small businesses access these programs directly to the state, or is everything intermediated through the FI? The FI are the entities that will be participating in the program, and they will then be providing the loans to the borrowers. So if you are a small business owner, we encourage you to speak to your preferred lender and encourage them to participate in the program so that they may be able to provide you a loan at the terms that y'all agree to that could be enrolled in the program. Is there another question? Is there a requirement to retain or create new jobs? There's not a jobs requirement for these programs. Okay, did I finish that one? Yes. Next slide, annual reporting as well is due to the bank no later than February 15th of each year from the FIs. So there will be a reporting mechanism in the portal to upload required document and enter required information and any explanations related to those. And should additional information or documentation be required, we can allow the FIs to upload those as well. So that's, most things are going to take place through the portal. We are currently in the allocation agreement review phase with the Department of Treasury. We estimate that we will be signing the allocation agreement early January, following which we have 90 days to stand up the program and open it to FIs to participate. So we are looking at a March participation go live date. And signing up at the tsbci.gov.texas.gov website will give you notifications for when that go live occurs, and leading up to it, notifications that when it will be happening. I see a question from the chat about a list of participating lenders. Yes, we will be publishing a list of lenders. We're also seeking to enroll as many lenders as we can. So if you have a lender that you've worked with in the past and have a good relationship with, please recommend them to enroll in the program or inquire about it. We're very much seeking to get a large distribution network for this program. So the more lenders that know about it and are interested in it, the better. And we're hoping that small businesses can help us on that end as well. So everyone who can get the word out is a help to the program and to the state. Questions and answers. Are there any other questions on the programs, anything I've talked about? All right, question from the chat. Are there any special provisions for VOSB, SDVOSB? There are some veteran, I believe that's part of the reporting, but we're not targeting additional LLR contribution limits or loan guarantee amounts based on those designations. What are the maximum and minimum amounts of the loans? Minimum. So the minimum loan amount for both programs, the CAP and the LGP, is $5,000. And the maximum amount for CAP is $5 million. The max targeted amount for LGP is $5 million, though with a special request from the FI, the LGP per loan amount could be up to $20 million. Another question from the chat. What all business documents are required and was the minimum credit score required? Those requirements will be between the borrower and the financial institution participating in the program. The state does not dictate required documentation. That's strictly between the lender and the borrower. Okay, any other questions? How can the funds be used? We will have a list of use of funds published on the landing page. After the tsbci.gov.texas.gov page is our current placeholder landing page. It will be updated with additional information as we go forward, and I will be sure to include that as well. That seems to be a popular question. How do we know if we qualify for this program? So depends if you are a small business or a financial institution. If you're a financial institution, we encourage you to apply and reach out, apply, and there will be, once the portal's open, a number of information fields and document uploads to provide, and we'll enroll you. As far as borrowers, it is the size of the business or nonprofit, and also the SETI designation is a target, but not a requirement. So fewer than 499 employees should qualify you. Will ERTC and PPP have any impact on these programs? No. It's a straightforward one. Can community participate in the programs? By community, I assume you're referring to municipalities or local governments, in which case there's the potential for participation through CDFIs. So I'd encourage you to reach out to your local CDFIs to see if they are participating in the program and if there's a way that y'all can work together. Funding to buy a trucking company. Question about funding to buy a trucking company. So for buying companies, there's funds may be used for acquisitions, just not buyouts of partner interest. So if you're an owner of a company, you can't buy out your partner, but if you're looking to purchase the assets of another company or ownership interest of another company, that would be allowable. Will there be targeted industries and multiple rounds of applications? No targeted industries, just sizes of businesses and SETIs, obviously. And as far as rounds, this will be a 10-year program. The federal allocation is divided up into 3 tranches, and once we once a state expends by allocating or contributing to a loan loss reserve account 80% of the first tranche, it can apply to receive the second tranche and so on. But the program will remain open for a minimum of 10 years. What are the nonprofit requirements to be eligible? If you can send us that in an email, if you have, we will respond to that. I want to get you a detailed response for that. Do nonprofits have different requirements? Again, we will send you a response via email for that. Is it open to new business ventures? It is open to startups. Startups are eligible, but again, it's through the relationship with the FI. The FI would would enroll the loan into the program. What kind of interest on the loans? Also, are the loans forgiven? This is not a loan forgiveness program. The interest rates will be dictated by the agreement between the borrower and the financial institution. So the borrower would apply for a loan at its preferred lender who is participating in the program. They would make that loan would be enrolled into the program. So the terms are not dictated by the state. That is strictly between the borrower and the financial institution. Do the FIs have lending goals? We do request when the financial institutions apply that they provide us their capacity for participation in the programs that they would like to participate in. So we don't have hard targets for lenders. We know that every lender's portfolio and ability to participate is going to be different. So it will be based on their own financial situation and what they're able to do given their financial and capital position. Okay. We've had a couple questions regarding use of funds, and I will read you a brief statute from the SSBCI from Treasury, SSBCI statute. So each financial institution lender must obtain an assurance from the borrower affirming that the loan proceeds will be used for a business purpose. A business purpose includes, but is not limited to, startup costs, working capital, franchise fees, and acquisition of equipment, inventory, or services used in the production, manufacturing, or delivery of a business's goods or services, or in the purchase, construction, renovation, or tenant improvement of an eligible place of business that is not for passive real estate investment purposes. SSBCI funds may be used to purchase any tangible or intangible assets except goodwill. The term business purpose excludes acquiring or holding passive investments in real estate, the purchase of securities, and lobbying activities. It's a long definition. There's a lot of information there. We will post that and we will reply to any emails we received on use of funds with that statute.
Hello, Dan. I have a question.
Yes.
This question came into the smallbusiness@gov.texas.gov email inbox, and I wanted to address it, because it's a question that we get regularly as a part of the small business team. And this one came in for the TSBCI program. So this comes from Margaret Michaels with the Ezra Joel Group. And her question is, my question is, are there any grants? This is her first time on this platform for information. And I wanted to say some things before hand over to you about this specific program. So grants are often very popular in the sense that, of course, the difference between a grant and a loan is usually that grant doesn't have a payback component to it. And this being a funding source that is coming from the federal government, separately from the two that I alluded to earlier, the PPP and the EIDL, which were under the CARES Act, they each had a grant-like component to it, meaning that the loans were forgiven, which was an earlier question, or it's had a straightforward grant. You mentioned, Dan, I believe you said that this is not a grant program or have a grant component. Is that correct, sir? I'd like for you to elaborate on that.
Correct. This is not a grant program. This is a credit support program where the state incentivizes lenders to make loans to targeted individuals and businesses that they may not otherwise have made. So that is the overall idea.
Absolutely. Thank you for that clarification. And with that, I want to mention another program which I also alluded to earlier, the Texas Travel Industry Recovery Grant. That one is for very specific industries based on their NAICS code, North American Industry Classification Standard code. And there is some information regarding that to where that program does have a grant component. If you would like to know more about that program, there is information on our website, which is gov.texas.gov/business. Under an incentives and financing tab at the top of that homepage, you will find the Texas Travel Industry Recovery Program. And also they have another a website that you can email for information as well, which is Tourism Recovery Grant at gov.texas.gov. So I'll repeat both of those things. The homepage to find that is gov.texas.gov/business. And then from that homepage, underneath incentives, you will find the Texas Travel Industry Recovery Program, and the direct email for that program and the administrators of that program is Tourism Recovery Grant, all one word, at gov.texas.gov. I thought that was a good time to plug in another program underneath the ARPA funds. So back to you, Dan.
Thank you, Jarvis. Yes, those ARPA funds, that grant program is a great one, and we're really, I work closely with the administrators of that program, and they're coming up on a new tranche, so definitely something to look into. Another question: have you already started the timeline for the rollout? We are close to signing our allocation agreement with the Department of Treasury. We anticipate signing that in January. Following the execution of that agreement, the state has 90 days to stand up the program to begin accepting applications for participation. So we are looking at March for the opening of this program. Also, there was a question on personal guarantees. And just to reiterate, the terms of the loan being the interest, the personal guarantee, potentially the number of years, and anything related to that, the amount, of course, those are up to the FI and the borrower. They will make that agreement. The state does not put any restraints or constrictions on those loan agreements. Though we do not enroll loans that would be classified as predatory lending. What are the requirements to sign up as a small business owner? So the small business owners don't have to sign up. The financial institutions will sign up, and they will enroll loans that they make to small business owners. So it's less paperwork for the small businesses. As far as the small businesses go, it's similar to any other loan process. They would go to their preferred lender if they're participating in the program, of course, and they would execute a loan with that lender, and the lender would then enroll that loan in the program. Can the financial institutions receive loans? So we do allow CDFIs to receive loans. There's a specific portion of the rules that will be published later on. Hope I'm not giving anything away, but once the rules are published, we will send out an email stating that they're out there for review. And if you want to sign up at tsbci.gov.texas.gov, you will be notified when those rules are posted, and that will be in there. Okay, I don't see anyone else typing in the chat, so we might be, oh, no, another question coming through. To ensure that lenders will not overcharge high interest rates for borrowers. We will not enroll loans that would fit the definition of predatory lending, and that's how we would ensure that. Okay, if that is all we have.
Yeah, I'm going to hop in here, Dan. I know we have some resources here at the end that I'll talk about here shortly in closing, but this was obviously not the ideal way that we wanted to have this information presented. Thank you to the audience for bearing with us and submitting as many questions as you did to the email address. Obviously, we would love to make it simplified where it's all right here through Teams, and we can have a little bit more interactive in the event. We may have a follow-up with this, so continue to send those questions so that if we have a follow-up presentation or webinar, we can come into that event with some of the questions that still weren't addressed throughout this event. However, do stand by because, as Dan mentioned, more information is coming as well, so that may serve as a platform for us to provide even more updates related to this program. But again, thank you all for being here. Thank you for your as much inclusion and submitting the questions that you did, and we'll work out our kinks and be better prepared for you next time. Anyways, I do want to talk about another resource, especially for the person who mentioned about grants and other programs outside of TSBCI. This resource that you're looking at now in the Small Business Resource Portal is something that we launched last March. It is a wonderful tool, and I know I'm a little bit biased because I partially helped to develop it, but it is a wonderful tool, and I know that because of the sheer amount of users that use it daily, weekly, and monthly. What you can do with this portal is answer a few questions about yourself and things that you are looking for, and it will provide you customized results based on if you're looking for funding, if you're looking for networking, if you have questions about workforce or any other business matter. You can get those information tailored to you, tailored to your location, tailored to your industry, all from this resource portal. So definitely give it a try. You can see the link there for gov.texas.gov/business-portal. Next slide, please. And I also want to introduce our colleagues who are working behind the scenes presenting those questions to Dan. Also, they are the ones who administer two different inboxes. The one mentioned earlier, the small business at gov.texas.gov. From that email address, you can email any inquiry, again, unrelated to TSBCI or any other issue. If it is related to TSBCI, we can connect you with Dan and Nancy. But Brian Roller and Jack Carroll, who are our offices and small business teams, business assistance specialists, we are here to support and serve you. So no matter what inquiry you may have, question, challenge, whatever it may be, feel free to give us a call or send us an email. We're here to support you and to continue to have these webinars and in-person events that bring information that you are wanting to know about. Again, I want to thank each and every one of you. I want to thank Dan and Nancy for being here to providing that great information. We do want to be more responsive to each of you going forward. Here's some contact information regarding our 2 administrators for the Texas Small Business Credit Initiative. You can get their email address, or you can contact them through that email address provided there, tsbci@gov.texas.gov. All the way at the bottom is the Treasury, the U.S. Treasury's email address, which is ssbci_information@treasury.gov. Also, the third bullet there is our events calendar. We do have 2 more webinars scheduled for the end of this year. So before New Year's Day, we will be having information regarding 2 more highly popular topics, including a week from today, a marketing webinar about what's hot and what's not. We'd love to see you there, especially if you want to increase your marketing going into 2023. All of our small business webinar series, the slides will be available within 48 hours. So that was a question I received via email. Yes, we do have our slides, and you will get those by email from your registration. Also, this webinar is recorded. So both the link that you use to click on to attend this webinar, as well as it will be uploaded to our YouTube channel. So you can watch it on 2 different platforms here in Microsoft Teams, or upload it to our YouTube channel. And again, that will happen within the next 48 hours. Again, thank you all for being here. We are cutting out a few minutes early, but as I mentioned before, if there's other information you want to get addressed, feel free to email us, the SSBCI team, or even the Treasury directly. Have a great rest of your day and happy holidays.